I've made this link tree so it's easier for you guys to get into contact with me. If you want to find out more about the course, it's over on my Buy Me a Beer. If you want to simply get into contact with me, it's over on my crypto Twitter or my crypto Instagram. Welcome back to Louis Crypto, where we talk about all things crypto every weekday. I hope you guys enjoyed today's update where we talk about Quant rejecting a key area of resistance, potentially signaling for continuation lower. Could it actually put in a higher low for another go at it? Let's go into those levels today. But we are talking about this double bottom neckline over here, which actually turned out to be a descending triangle or M pattern or head and shoulders neckline at $131. This is after we've bounced up to $131 after bouncing off of my technical target down at 106, and all of this this whole entire play from the loss of 131 to the bounce exactly off 106 back up to 131 has all been called in my last few updates. So if you appreciate that, make sure you do like, subscribe and comment. We're on the road to 10k subscribers. Let's try and hit that before the end of the year. That would be incredible. Doesn't matter if not, but make sure to share and comment and like for this stupid algorithm. But again, after meeting our technical target, we were anticipating a reversal and that we will have another go at breaking above this massive bear market box if we can do one thing, and that is reclaim the neckline of this bearish pattern. Until then, again, we're just coming up into it as resistance. And could we now already start a retracement? Understand that we reclaimed this golden pocket over here. So if we do dump, we are simply bullish dumping, okay? This will only occur with a higher low, okay? So we would need to see a higher low that holds $115 simply because this is the golden pocket and we should have never lost this in the first place. So could it just be that this is a shoulder, a head, and a right shoulder over here that could come down as deep as that wick over here? So we could even say that this is the left shoulder. Do you understand that? Because yeah, this inverse head and shoulders pattern, the left shoulder over here, the lowest point is that where the bodies are there. It's up to you to decide where you think the lowest point it can go. But ignoring that pattern, just looking at this massive rally, we can dump about 50%. That would be back down pretty much to that wick over there, maybe a little lower to the 618 before reversing and having another go at 131. Of course, we can fail to even get back up to 131 because this red box between 124 and 126. So if we do now see this dump that comes back down to around 115 to 115 to $119 per quant, we would then need to see a push above this red box. We could actually get rejected here and lose this golden pocket heading back down to the 786. So these are your two scenarios that could be happening. So now I'm going to show you with the fibs, and you can see exactly what we said. The support is at 115 to 119 after this big rally. This is where the Fibonacci's are now telling us is where we could find support. Guys, I didn't even need the Fibonacci's to tell you this. So if you want to learn this step by step, I will teach you. I have a one-to-one mentorship plan. This is where I'll spend 10 hours of my personal time making sure that you have all the tools you need to become a self-sufficient trader. If you want to find out more information about these one-to-one lessons, then please head over to my link tree. Again, it's underneath this video in the description or the comments section. It's pinned at the top. All the links you need are there, as well as in the top right corner over here, the information button will send you to my link tree where you can click the crypto Twitter or the crypto Insta and message me there for more information on this. So let's continue with this quant update. I'm going to place those fibs back on because it's telling us that we could come back down to this area, but we do have the 111 level as the 786 on the closes of the body here. I'm not expecting us to go as deep as that. Again, we should most of the time bounce off of this. And again, we're yet to even start this retracement down. It looks like today, if the daily candle close were to finish like this, it signals that we've seen a stop in momentum simply because we've run into key area of resistance, followed by a change in momentum. So we were rallying up, we got pushed back down, and now we're reversing the trend. Potentially, if it closes as is, this could be a bearish engulfing, but can you see how we're still above 124, as well as the moving average over here, the 20 at 125. So let's see Quant clearing this. Let's see Quant losing this before us believing that we're going to come down to here. And then we need to be shown proof, like these wicks to the downside, We need to see wicks to the downside in this area. If not, we could actually be coming back down to 106, and that could tie in with this massive dead cat bounce that I was talking about back in November. That is complete. Remember, guys, a dead cat bounce, all it is a big rally down and then a failed higher high. This is where we failed the higher high in the golden pocket area. So that is between the 0.6 and the 0.5 fibs. And I'll just show you that now from the low to the high. Here, the 0.5 and the 0.6, we ran into that area. This is what I said back in November. I was getting laughed at. And we returned up to then. I said, look, even if you're going up to those prices and you could go a little bit higher, you could go a little bit higher to the 786 over here at 190. You could go to that and still have this big dump. Look what's happened. Big dumps happened, and we met my target, $106. But understand, after meeting this target, we now need to reverse, which we've done, return to there, which we've done, as we've called, but now break above this yellow line and this bear market box. Only then can we be certain that we're not going down further and further and further. Please do not forget that if $100 psychological level, only, please understand, only if $100 is lost with the daily and the weekly closes, only if it's lost with the daily and weekly candle closes, is it going down to 45. Please understand that there's a criteria to it. I'm not saying it's going down here now, guys, please. I get so much hate, it's crazy, because people don't understand. There's validation and invalidation points, and this only happens if we go below 100 and stays below 100, and we're not below 100. We bounced off 106, which was my exact target, and we returned to a 131 exactly. And now I've told you the levels that if we do start dumping, this is where we would need to catch support, which is $115 to $119, and we didn't even need the fibs to tell you this. So if you want to learn, I've got more information on my crypto Twitter and my crypto Instagram. Please do message me there to get started with your 10 hours of one-to-one session with me. And you also get the course included if you just want to do the course because you believe you don't have enough time on your hands. Be part of my community. Again, both of these options include my crypto Discord chat, where in the last day, if you go over to my Twitter or my Buy Me a Beer, I've posted results where someone's made over 90% in just one trade over the last day. So if you want to take action on the course, if you believe you don't have as much time, then yeah, you can take that. You do get the chat included. But if you want all three of these options, that's with the 10 hours of one-to-one help with me. And I'll give you all the tools you need to become a self-sufficient trader. You just need to be disciplined and follow the plan, basically. Thank you guys so much for tuning into this Quant update. I hope that was beautiful for you guys. Please do like, subscribe and comment because the algorithm is nonsense, and yeah, I'd really be appreciated if you could do that. So if you want to join my community, you guys know what to do. I'll catch you in the next Quant update. Cheers.